Hello and welcome to Web3 Unpacked. I'm your host, Rich Pasqua, with my co-host, Matt Sky.
Hey there.
Today we are thrilled to have David Garrity of FYEO here, cybersecurity expert. He's going to help us unpack the world of cybersecurity as it relates to 2.0 and beyond into 3.0. David, it's great to have you here. Thank you.
Rich and Matt, thank you very much for having me on.
Thanks. And David,
Excellent.
so I guess I think to kick things off, maybe even before we get into FYEO, tell us about your background. You have so many different things you've done in terms of cybersecurity, working as an analyst, building companies. Let's maybe dive into that a little bit.
Sure. Certainly MBA, then worked on Wall Street for a couple of decades. Focus was on technology research. The first area I focused on was cellular telephones. This was back at a time and a date I don't want to mention because it's so long ago. But nonetheless, it was an emerging technology at the time. And certainly have had a great interest in terms of the various waves of technology innovation that have been taking place. Looking specifically at FYEO, which stands for Your Eyes Only. And what we do provide identity protection and threat management and domain monitoring for Web3 companies primarily. We also do code reviews for also DeFi projects to make sure that they're cyber secure. But the opportunity that we saw that as the global economy is increasingly digitizing, Web3 is the path of the future. We do think that critical functions, financial services, are going to be moving over towards Web3, but first and foremost, they do need to be cyber secure.
So, David, if you can tell us, okay, so you've had this very, very interesting and maybe even legacy tech background in some ways, and now what got you into blockchain? What got you into what is really maybe one of the most significant developments of the web itself?
Well, what led towards that, and it was a collaboration back around 2016, 2017 with my chief technology officer, Thomas Olafson. We were both advising a project that was looking at doing quantum encryption. And as we're looking now at the advent of quantum computers, obviously the amount of computing power that can be brought to bear obviously is serving to render current cybersecurity standards such as RSA obsolete. To this extent, being able to look at the blockchain, which has a higher order of complexity, is probably the way to go in which most applications that are critical are going to be delivered, and increasingly so over the next 5 to 10 years. We are monitoring with interest how rapidly quantum computing is making its way into the marketplace, but we think that given the nature of quantum computing and given that a lot of the things are going to be going on in the background, you're not really going to know what's going on below the surface of the water. What we're hearing about quantum computing is really like the tip of the iceberg in this case. But if people want to be safe or secure with their information, moving over to a blockchain platform is going to be critical in our view.
Yeah, quantum computing is wildly fascinating yet scary at the same time, because it's the only thing that could actually get through blockchain itself, correct?
With given enough time and computing power, but arguably you can find ways to dynamically manage credentials, as well as also other security protocols, which would make it more difficult. You try to minimize the attack surface, and not only do you try to minimize the attack surface, but you also try to make what you've got protecting an enterprise or an individual more dynamic. Moving targets are basically harder to hit. And I think the case remains that this will be certainly so, whether it's quantum computing or whether it's current computing standards.
Got you. And David, you were hitting on this before, and I think for our audience, they'd be interested in understanding kind of like maybe the corporate adoption curve. Where are you seeing it right now? And then a couple of years out, where do you see it?
Well, we've been doing some work and actually started ourselves off on our consulting practice back in 2018, working with Fortune 500 companies around supply chain applications. And a lot of that was taking place around sustainability, or being able to prove the sustainability of their own supply chain practices. We just recently finished doing work with Shell around a program that they've developed and now rolled out for sustainable aviation fuel. And this is going to allow airlines and corporations to basically obtain aviation fuel that has been developed from sustainable sourcing and get environmental credits for that. And we think that this is something that obviously we support, and we're happy to see that blockchain and Web3 are actually starting to do work in that direction.
Yeah, well, it's incredible to see that real world utility, and especially at these major companies at this point. This is going well beyond the bored apes in terms of a quick image. David, when you look at that kind of adoption, are you seeing across all fields this similar kind of use of blockchain?
It's starting to happen in certain areas. I mean, clearly away from things such as aviation fuel, obviously within financial services, you're starting to see a compression of further settlement periods. So, the ability to move transactions faster and at lower cost is certainly significant. We know that one of the better use cases for blockchain and more specifically for cryptocurrencies had been around, cross-border transfers, where costs were high and settlement periods were long. And so from that standpoint, financial services, critical in this area, but we're starting to see other areas, such as we mentioned, bringing on the adoption curve.
Yeah.
So a big part of, I think, what's happening and what maybe is holding people back from blockchain is that cybersecurity angle. What are the biggest challenges we're seeing right now in Web3, especially as you're mentioning quantum computing and whatnot?
Well, it goes back actually to looking at what has been kind of a root cause for cyber insecurity. And it's basically boils down to how poorly people are managing their own credentials and the extent to which their credentials have actually been exposed. Over 80% of cyber attacks take place because of poor identity protection. And so any steps that can be taken in that area to improve certainly is going to be critical. And especially so when we start to look at DeFi. We can say that, based upon, I think, numbers that Chainalysis came out with, about 30% of the hacks came about because of flaws in terms of smart contract logic. But that leaves the other 70% of attacks that were taking place due to basically poor credential management and other elements such as that. Now, we know, while we can look at DeFi as being an area of great promise, the issue around its acceptance is it has to be cyber secure, and it has to limit the ability for hackers to come in and steal millions, if not billions of dollars of value within a very, very short time, like 60 seconds.
Wow.
Do you see that happening, those vulnerabilities happening on the kind of the 2.0 interface between 2.0 and 3.0 technologies? Is that the gap, the exploit gap there?
Well, I mean, to the extent that technology is built as a stack, where you're basically putting layer on top of pre-existing layers, to the extent that hasn't necessarily been adequate integration that takes place, there are a number of possible vectors for an attack to take. One of the things we would say, specifically looking at DeFi, while it may not necessarily be a legacy technology issue, one of the areas where there really have been significant attacks have basically been in the applications building bridges between different protocols. And these bridges, have seen significant attacks. I think Wormhole was one earlier this year where $360 million was taken. Fortunately, that wasn't a project that we had done any code review or code audit work on.
That's really interesting, because what a lot of people don't really understand is that building a DApp or an environment for a specific application is not just one protocol. It's multiple protocols laying, like you're saying, a tech stack that kind of communicates with itself in a pretty sophisticated way.
And what goes into the blockchain audits that you do? That seems like an extremely intensive process, right?
Well, the first thing that we'll do typically is we'll do, a threat model, and we'll map out what the logic is. And we'll look for where there may be vulnerabilities or weaknesses in the logic that was developed and coded for the project. One thing that we do note is that coders in developing applications can sometimes be relying upon third-party libraries of code. Those third-party libraries themselves may not necessarily be audited, and to the extent that they're just drawing on an external resource, they may be introducing unwittingly a weakness that can obviously threaten the viability of their own project.
Rich, this is something we've talked about a lot in terms of those third-party elements, right?
Yeah. I mean, we're working with some protocols now that, they're creating their own code bases, and they're putting security checks in place as they go, and everything is kind of validated within a smaller group and then disseminated through the network. But I could see this, just being a day-to-day tool that everyone will have to start to either use the audit or actually implement into their systems at some point for absolute security. So, yeah.
And it really
not only what we do is, to provide the audit or the review of the code, but we also work to help projects protect themselves in terms of, domain intelligence or threat monitoring on a real-time basis. So rather than a DeFi project only be as good as its last audit, we're trying to provide more holistic approach as far as providing overall protection.
Nice.
How does that breakdown work? Overall protection, continuous monitoring versus a full-on audit. What's the distinction between those two?
Well, in audit is where you're going in and specifically, setting a scope for the review and then going through and analyzing the software code and the logic structure behind it. When we talk about doing, domain intelligence and threat monitoring, we have a database of, over 20 billion leaked credentials, which has been aggregated over about the last 10 years. And certainly in there, we can help to identify, what are the threat actors, and we can also identify, which domains have been subject to more penetration than not. And we can even go down to the individual level with these exposed credentials and see who in an organization or a project may represent a risk to the extent that they haven't necessarily, had adequate cybersecurity hygiene to speak of.
And these audits, I would imagine, from a product development standpoint for you, FYEO, is almost every day you're probably seeing new features and functionality that you can actually add to your application suite, correct?
We're always looking for a way to develop tools to make the auditing process go faster. Productivity obviously is one thing that technology helps support. And in this case, we know that people are interested in getting to the market, but we also think that, cybersecurity has to be a necessary condition for any project going into the marketplace to actually get user trust. So even though there is a certain amount of automation that's starting to develop in the code review area, our belief and our experiences that a lot of the tools that are out there right now don't really capture the more complicated weaknesses or vulnerabilities in a project. So you can start with tools to try to eliminate, sort of the low-hanging fruit. But if you really want to go through and make sure that the structure is sound, a more in-depth code audit is required. And typically it requires not just one auditor, but we work in conjunction with other firms because obviously we are of the belief that, two sets of eyes are better than one.
Absolutely.
Can you give us a breakdown of maybe a case study? Just curious. You worked with some major players, Solana and whatnot, right?
Certainly. We've been working with, for example, the Cardano Foundation. And what we've done with Cardano is we have collaborated with them in terms of setting standards and routines for how to go about actually doing a cybersecurity review. And there's information to that effect that's on our website and our company blog that, if people want to go in and look at it, this is a real life example of what we have done with, probably one of the major layer one protocols out there.
Mm. So you work with them on kind of a consultancy level? Is that it? Or did you actually implement tools for them to use on a daily basis?
Generally, we work with our clients on a retainer basis. And, to the extent that we have built relationships with the various foundations behind the various layer ones, we've been very fortunate in this regard to be able to consult and advise on some of the standards that are being developed and then implemented within each one of the protocols.
When we look at cybersecurity and when we look at Web3 and we look at blockchain, I think this is the lost topic. Everyone is so excited with so much enthusiasm about jumping in and this is the next generation. But when you look at that institutional interest without these basic guardrails, I don't think it's going to happen. And what I'm curious is when people are working with you at FYEO or just in general, is the space, is it mature enough for big institutions in general, or are we not quite there yet? Is it kind of in development? Where are we in that process for mass adoption?
We're still in the process of institutionalizing Web3, either one from the development of applications by companies, or if you were to look at institutional investors, looking at cryptocurrencies as an asset class. Granted, the valuations have come down since last November, but you're still looking at about $1 trillion worth of value that's within cryptocurrencies overall. And there's been a greater interest by institutional investors. However, institutional investors have fiduciary duties to their clients, and they can't afford to put capital to work in a project where it could be hacked and billions of dollars could vanish in short order. So, in that regard, even though there's a great interest on the part of DeFi projects to rush forward and to get to market, if they lack this kind of cybersecurity threshold being met, it'll make it far more difficult for them to scale. At the same time, you're also starting to see from a regulatory standpoint, much greater encouragement, whether it's within Congress to develop regulations, or whether it's on the part of, say, the Securities and Exchange Commission here in the U.S. to require token issuers to understand that they are issuing securities, and then also the requirements of the SEC on issuers, not just of tokens, but of most securities, all securities, to be more forthcoming in terms of what kind of cybersecurity protections do they actually have. And you're actually starting to see requirements that members of the board of directors for issuers have a cybersecurity background. So this is becoming that's more important, not only within the context of Web3, but if we were looking in the context of, say, ESG investing, cybersecurity is considered part of governance, which would be the G in ESG.
Yeah, it's funny because the more we, the way I see it a little bit is the more we advance with technology, the same stopgaps and checkpoints or checks and balances still need, or similar checks and balances still need to be put in place. And I think there's a common misconception that, Web3 fixes everything. Cryptography is the be all and end all. But to your point earlier, there are these gaps we always have to watch for exploits and whatnot. But it is a common misconception that, everything is, buttoned up and everything's going to be secure. And it really isn't. It's just attacks will become more sophisticated.
Certainly. And, as we know, that given the amounts of capital, of money that have been lost in terms of these various hacks, obviously, part of that money is going to fund the capability on the hackers' side to further up their game. So from this standpoint, you are looking at a conflict that's that's working itself out, if you will, in the shadows behind what we're doing here with Web3.
Yeah.
It is a very covert thing. What are the big vulnerabilities that you keep seeing? What are the common ones you keep encountering, or even the most challenging ones?
I would say, maybe the biggest one that we have is basically human nature. If we looked in cybersecurity, if we look in cryptocurrencies, obviously there was a lot of money being made very quickly. So one might argue that in the dash for cash, people decided that they were going to cut some corners, and that, cybersecurity, while it was, in their view, it was nice to have, no, they really needed to have it, unless all they wanted to do is to basically have a very quick kind of pump and dump scheme.
I guess that's a lesson we've learned the hard way, huh?
Most likely. The real issue here is that if you're going to have something that's stable, that's going to scale, that's going to draw institutional interest, or that's going to have enterprise adoption, there are baseline requirements that need to be met. And, it's very, very difficult to make the argument that cybersecurity is not one of them.
Mm. I wonder, when you're having conversations with institutions, are they aware at this point and begging for that security, or are you kind of selling them on that security still? Are you telling them, hey, this is more important than you realize?
I think that people just look at the news flow, look at the headlines that have come out over, the past 12, 24, 36 months, and just see that, the size of the hacks involved have not gotten any smaller. They've become more frequent. And, in that regard, there is a clear, definable risk to being involved in this sector as an investor. So in this regard, they are starting to consider this clearly part of their necessary due diligence in considering any project. We also note at the same time that investors are interested in investing in security companies on their own. So from that standpoint, we've seen that while there has been valuation compression in other areas as financial markets have, gone into a decline around higher interest rates, within the field of VC investing, there remains very, very strong interest in cybersecurity, particularly as it pertains to Web3.
Yeah. I think from an investment standpoint, and we have a bit of that behind us with River Capital Holdings and Ventures, it now becomes top of mind, security. And when you're investing in a DApp apps or a company, or being partial owners in an organization, we lift the hood from a business standpoint, but it becomes more detailed for us. Now we have to kind of go in more. And one of the top line questions is, how is your product secure? Especially if it's a DeFi product. How are you guaranteeing this? Are you, backing your system with stable coins or whatnot? And how are those transactions and arbitrage models put together? Because that is in itself, the arbitrage models with certain stable coins are really a big point of contention and security. But we're seeing it on the venture side, where we're just we have to dig deeper just to make a simple, business decision.
As the attacks are upgrading, you have to continue to upgrade on your side. What kind of new tools are you deploying? And maybe you can't even say what all those new tools are, but what would those tools be? And when you present those to, say, a client who's working with you, how can you ensure that they are now secure? How can you provide that verification on your side?
Yeah, I mean, as I mentioned earlier in our discussion, we work and recommend highly that clients work with more than one review firm. That what we do is essentially being done on a best efforts basis. Obviously, we are mindful of what the risks are that are involved in terms of the size of these hacks. And so all we can say is that we can do things on a best efforts basis. We can also point to our track record with respect to the projects that we've worked on, the fact that, knock on wood, they have not yet been hacked, although that's always going to be a matter of when, not if. But so far, we've been very fortunate in the performance that we've had. So from that standpoint, we can say that there's a track record. We can show directions in which we're working to become more efficient with the process that we have to go through and review. And to be honest with you, some of the development work we're doing is proprietary. It may be possible on our part that we'll consider doing patenting of some of the developments. And so as a result, yes, some of these things have to remain sort of under wraps for the time being.
Now, David, just, as we kind of scratch the surface and go a little deeper with cybersecurity, how do you feel AI, the introduction of AI and other technologies like VR and metaverse and all that stuff, how do you think that will impact or compound security efforts moving forward?
We're already using machine learning on our own in terms of, taking the data sets that we have and, becoming more efficient in terms of recognizing patterns. And, it does go into sort of the automation aspects that we were talking about previously. Looking at VR, certainly if you could have a good representation with respect to a tech stack and, see from a visual standpoint where there might be vulnerabilities, that could help as far as threat modeling or threat mapping is concerned. Relative to discussing the metaverse, obviously having, NFTs themselves are not secure, and Bill Murray knows that, and obviously a lot of other people who are on OpenSea know about that as well. So, from that standpoint, that there continues to be a growing need. One other element I would say, apart from all this, apart from talking about technology advances, is that even as these technologies are advancing and you have products such as NFTs or you have DeFi applications, cybersecurity, we say, is important. One of the things you're going to be looking at here as a requirement potentially is from the side of insurance. If you talk to insurance carriers and you look at the cost of cybersecurity insurance, or you look at, trying to get loss coverage, risk coverage on this, that's becoming increasingly expensive. And it's most likely you're going to have some interesting motives or motivations, if you will, by the insurance carriers themselves to go to their clients and say, look, you need to provide us with evidence that you've met a certain minimum threshold requirement for cybersecurity protection within your own projects.
Yeah, interesting. They're creating their own checks and balances for their side too. That's very interesting.
I've got to rewind a second, I think, because I think a lot of people don't understand this. You say NFTs are not inherently secure. Can you detail, maybe for people curious about that, in what way, and maybe how we can move toward more security in that area?
Well, I mean, it boils down to sort of what do you do to protect any account that you have. I mean, the NFT itself is something that's held in a wallet, and if wallets themselves are not secure, or if the custodian that you're keeping your NFTs with is not secure, that's where the risks are. The NFT itself, may also be subject to possible replication. There have been some instances of that, but, it's more often than not wallets are insecure and the custodians aren't necessarily proper in terms of the security measures that they're taking.
David, when you say replicated, NFTs are being replicated, are you talking about someone steals some meta information and maybe the visual or audible asset itself and then remints it, or is it just completely stolen?
First, I think it would be completely stolen. And then there's another issue here is that, to what extent, I mean, there hasn't been anything, I think, in history that's had value where it hasn't invited knockoffs of one kind or another. How many times do you go down to Canal Street in Lower Manhattan and see oh, this is a Gucci bag? Well, no, it's not really, but, fine, you can think it is.
Right.
Let's do a breakdown just quickly, if that's okay, on some of the products, because you have a very interesting suite. So maybe you could break down for us FYEO identity, and then break down for us the other FYEO domain intelligence, and then we'll revisit blockchain security a little bit in a little deeper way. But maybe starting with FYEO identity.
Sure. In the case of FYEO identity, I mean, this is what we call FYEO ID, and it's to give individuals essentially for free access to our tools to, improve their password protection, which basically means we have a patented process using public and private keys to secure people's information. This is not stored in any kind of a database. It's actually on the blockchain. And, in contrast to other companies, say, such as LastPass, who does have a centralized database that has been hacked, this would not happen with us. Now, this is something in terms of FYEO ID that we typically will offer to, say, if we were to go to a DeFi protocol, say Cardano, and we were to provide them with FYEO domain intelligence, what we would also try to provide all the users in their ecosystem is FYEO ID. That would go along as part of that. So people can still use FYEO ID on their own. You can actually go to our website. We have a beta link You can download it and test it. We have mobile versions for both Android and Apple that are available. But this is something that we think cybersecurity is a human right. It should be considered as such. And, we put our best foot forward to make our product available. Obviously, there is an intention on our part to provide other value-added services above and beyond that. But we think at a base level, what we do with FYEO ID is something that really is helpful to not just enterprises, which is really more FYEO DI, but on the individual level as well. Now, looking at FYEO domain intelligence or FYEO DI, there we're using our database and our dark web monitoring to provide real-time protection against threats that may be developing against either individuals within an organization or their internet domains, or say in the case of a hospital, if you had medical devices that were connected to the internet, all these IoT devices have their own addresses, and they themselves, as we know, can be subject to being hacked. So what we have with FYEO DI as well as with FYEO ID is something that has a fairly broad range of application.
When you look at the different enterprise level applications of your technology, and then when you're looking at people at a smaller level, what are the differences in terms of security concerns? Because I assume when we're talking about FYEO ID, an individual is thinking about very different concerns than a mass organization.
Well, individuals obviously want to make sure that their personal information, whether it's their bank account, credit cards, that those are all secure. Obviously what we do is to make sure that all those elements can be managed by the FYEO passkey. And, this is something that we don't know what it is. We've got it written on the blockchain. Only the user has access to it. And so this is something that they can take with them, on whatever device it is that they're using. So you don't necessarily have to, say in the case of any protection that Google came up with, you'd have to be going into Google's computing environment. If you were to do something within Apple, you'd be restricting yourself within Apple's computing environment. Our idea here with FYEO ID is to be computing environment agnostic. So you can basically port this across any device that you're using.
Interesting. Does it work with hardware wallets as well, like a Trezor or something like that?
We have applications that we're developing in that area.
Awesome. Wow, that's really cool. To kind of keep it, in cold storage would be amazing, just like, any other crypto. Mm-hmm. Fantastic.
Well, it's really incredible. It's the most significant thing when you think about it. When we're talking about Web3, we're talking about building the trusted web. And we hear about the soul-bound wallet and more of our identities going online. And right now, like you were mentioning, like with the LastPass situation, it's just a reminder that we really are bound to certain companies. But it seems like with this direction, when we move to blockchain, when our own identities, our own security is platform agnostic, then we truly own our data, right?
That is basically the idea. We do think that with Web3, and we're trying to be ourselves a Web3 company, which means that we need to empower the individual first and foremost. So, if we can take care of protected identity in that regard, if we can put in place the foundation where people having control of their data can find ways to best gain value from that, or at least to have privacy and protection around that. I think that is something that everyone at a certain core level will think is important.
Yeah, it's interesting to hear you talk about this, because really, in essence, you're staying true to the core idea of blockchain, meaning the individual is taking back the rights of their information and gaining more control. The individuals are offering data or personal information as needed, not the other way around. Whereas now we are the product. Now the roles will be reversed, and we will be interacting with products and brands and services more.
Sure. Individuals have to be able to exercise their own autonomy and their own discretion. There has to be a matter of choice, and consumers, individuals, have to be free to exercise that.
Awesome. Good. Yeah, because a lot of these, DeFi companies and whatnot, they almost kind of forget what this whole thing is about, right? It's not a cash grab. I mean, in certain cases it is, but it's not all about cash. It is about the idea of freedom and autonomy, you know? So it's good to hear that you guys are staying the course.
Haven't been distracted as of yet. We, didn't decide to go down the route of having an ICO ourselves. We think that there are various important use cases for cryptocurrency, but this was something that we didn't really think was appropriate for us.
Wow. Okay, good. Now, I'm just curious, for my own sake, how are you working with, say, the government and or regulations and regulators? Are they getting in the mix a little bit? If so, how hard or fast?
Yeah, my colleague, Michael Bjorn, actually is over in Strasbourg today and is participating in a forum which is focusing on cybersecurity. And it's looking at both, government representatives are there. Also, our Chief Technology Officer, Thomas Olofsson, has a cybersecurity conference that's going to be taking place next week up in Stockholm. And that's been going, this will be the 20th year that's been happening. So there'll be people who are coming in from government there also. And, in terms of some of the discussion that we've had as an organization, we've worked with organizations such as the Global Blockchain Business Council. Our Chief Revenue Officer, Jim Loperfido, is the co-chair of their working group on digital identity. So, from that standpoint, we have been involved in some of the bodies that are serving to help develop standards that hopefully will find their way into, the regulatory frameworks that we think have to come up around Web3 in order to further guide its development, and then in the process, not only guiding its development, but helping its development accelerate.
Awesome. Yeah, it's refreshing to hear guys like you kind of influencing up and across. So that's great. Good news.
I know a lot of people always get very scared when they hear regulation, although it is, I think, admittedly necessary for the space to grow. What type of regulations would you like to see? What are you seeing as well?
Well, we think in terms of just establishing the principle of having a sandbox within which people can innovate is important. And we think in that regard, to allow that kind of regulatory space is to, allow the elements that are within the marketplace to actually prove out what models and what approaches may actually be better than others. Now, I think if we wanted to look at sort of from the investment side of it, we do think that, having some sort of level of securities protection, you have it in the case with individual investors investing in equities, in stocks and bonds. The Securities Investor Protection Corporation, or SIPC, is an element that's important and that most regular brokerage companies or exchanges will offer. We don't necessarily see anything like that as of yet for the exchanges, such as Coinbase. And obviously anybody who had money that had been tied up in Celsius would wish that there'd been an SIPC that they could go back to kind of help them recover, the monies that they had allocated there. So I think that, while a regulatory sandbox on the one hand may be nice, we think that there are certain baseline protections for investors, a la an SIPC, that clearly are desirable. And I think that, something will be done in that regard, perhaps not during the current Congress, but I would say when we look towards 2023, the time will be ripe, I think, to have something put in place.
I think that'll just offer a bit more confidence to investors and developers across the board. So, yeah. Really good.
It really feels like the regulatory piece is the final piece in some ways for us to see true mass adoption and acceleration. And you're ahead of the game, which is really impressive. I want to jump around just a little bit because you seem like you very often, David, have had a good foresight. And I noticed like 5 years ago, you were writing about how investors needed to pay more attention to cryptocurrencies. Those were a piece for Invest. I think it was a Yahoo Finance piece. But what gave you that insight back then? And then what is, if you put your Nostradamus hat on, what do you see in the pipeline that we're not seeing today? What technological advancements should we be paying attention to?
Sure. Yeah, I mean, 5 years ago, I was actually doing some consulting work for the World Bank in sub-Saharan Africa. And, I was looking at the issue around sort of banking the unbanked, financial inclusion. And one thing that's distinguishing about Africa, in contrast to other areas of the world, was that this development around mobile money had come up in Kenya, starting back in, 2007, and then was starting to accelerate in terms of its development. And one of the things that I saw as part of doing this work was just to see, the level of cross-border transfers, which is, in terms of business terms, it's a $600 billion a year business. And, the transfer fees were something in the order of about, 9%. And wow. Settlement periods could be 3 to 5 days. 9% on a $600 billion flow is $54 billion a year. Now, obviously, that goes to the likes of a JP Morgan, Chase, and other well-known money center banks. But, if you're going to have a benefit going to the financial inclusion of people who are not banked, people who are depending upon transfers, being able to work with organizations like Stellar, which was a cryptocurrency at the time, still is now, were significant because this is what they were targeting. And so I was very interested in just the ability to reduce financial costs and the friction around fund flows on a global scale using cryptocurrencies. And I thought that this was a very good use case and still remains one very much so now. So I thought back when I wrote that piece that this was one definite area, and it really has taken root in that regard. So I'm very, very happy to see that. Now, obviously, given what we talked about earlier, while we have said that artificial intelligence is important in terms of driving productivity, I really think that maybe the major driver here that's going to be driving Web3 is the advent of quantum computing, because the extent to which it imperils other pre-existing cybersecurity standards. So in that regard, we're looking at a whole legacy IT infrastructure that arguably is going to need to be rewritten around Web3, just given what's taking place around the computing environment.
So there's a tidal wave of a threat coming, basically, and we're in this tiny little outdated hut, and we need to basically match the size of it, right?
Well, Nostradamus was always good about foreseeing doom, black things on the horizon. So run for cover. But no, there's no cover to run to in this case. You're going to have to rebuild.
Mm. And I guess you kind of have to think like a hacker, right? To be able to build these technologies, you have to almost predict what types of threats are going to exist. Am I right?
Well, I am happy to say that my colleagues have won hacker contests at places like Black Hat. But we like to think of ourselves as being ethical in this regard. So, we're not out there doing it for fun and profit and illegality. We're doing it for legality and out there try to basically do a service to the ecosystem and do well by doing good.
Yeah, I mean, hacking is the part of the baseline of what you do. It's all about it. So understanding it and understanding vulnerabilities and backdoors and everything else like that is part of your day-to-day routine. So
true.
Yeah.
But, the day that you see me form an organization called Sutton Associates, you should start to worry.
All right. I got you.
No, but it does seem like in order to know your enemy in that sense, if that's the hacker, you have to sort of understand how they work, and you have to really get involved at that level. Just curious. So people who are looking at FYEO right now, they're curious about how it can help their business. They want to jump in. Where should they start? What are the questions they should be asking? Obviously, I think they can go to gofyo.com, but what should they be thinking about?
I mean, what they should be thinking about is that, what's the level to which they want to scale? And, what have they done from a development standpoint in terms of actually building with security requirements, cybersecurity requirements in mind? And in that regard, as in our code reviews, we work very closely with developers. We don't just necessarily scope the project, go away, and then come back after a certain period of time and said, well, here's your report. we're actually iterating very closely with the developers on our clients' projects and making sure that, we're going through and understanding what was their approach, how could that be augmented, and more from the standpoint that if people wanted to come to us, they probably could, and before they actually start a project and engage with us, we probably can be helpful to them in terms of picking the paths that they should pursue.
Mm.
Yeah, I think the work you're doing is arguably some of the most important work being done in the development of Web3 right now. And it's really something that isn't talked about enough. I guess, as we sort of wrap up here, we usually like to ask, give us 2 or 3 takeaways that you would want our listeners to remember as they leave. What would those be?
Well, first and foremost, cybersecurity is a universal human right. And from that standpoint, people deserve and can get better protection. And obviously they can come to FYEO and use FYEO ID and do that for free. To entrepreneurs and innovators, you need to build with security in mind. We are operating in an environment that from a cybersecurity standpoint is already hostile. And based upon the technology trends that we look at, quantum computing, it's likely to become more hostile. So cybersecurity becomes increasingly important. The other thing I would just say more broadly for investors is you're not going to find insurers out providing loss coverage. So from a due diligence standpoint, you need to make sure that however it is that capital is being allocated, that the governance principles that are being employed where you're going to invest actually are very mindful of cybersecurity and approach that with a security first perspective.
All excellent points.
And David, where can people find you? Obviously, go FYEO.com. Is there any place else they should check out?
We're also on LinkedIn, and we're also on Twitter. And Web3 tends to be more Twitter focused, so probably best to look at us on Twitter first. We provide a fair amount of content on a weekly basis talking about developments that we see within Web3 and how we're going about working with our clients and on the projects that we're very proud to be involved in.